Look, we're in a bull market. It's been clear. Asset prices are high, credit spreads are low, consumer's still okay, the consumer has jobs. Remember, the jobs are what usually starts to force people to cut back and change things, and consumers spend less and companies cut back. So far, so good.
JP Morgan's Jamie Dimon telling us exclusively that it's so far so good on markets, even as gold surges past $4,000 amid global uncertainty. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. FTSE Russell upgrades Vietnam to emerging market from frontier, potentially unlocking billions of dollars in fresh capital for its financial markets. We speak to the head of one of the country's largest asset managers, VinaCapital Chairman Nguyen. We'll be sharing her views. New Zealand Central Bank surprises markets with a steeper than expected 50 basis point rate cut and signals more easing ahead as growth falters. The RBNZ is now outpacing peers, including the Fed and the RBA. We'll ask the governor of Denmark's central bank whether global tariffs risks warrant easier monetary policy stances. And with commodities trading in the spotlight, the CEO of India's largest agricultural commodity exchange joins us to talk expansion plans and market strategy. Let's get straight to our top story. Vietnamese assets are in focus after the country clinched a long-awaited upgrade to emerging market status from FTSE Russell. Its stocks will be included in the index compiler's secondary emerging markets grouping from next September, joining the likes of China, India and Indonesia. The move could unlock billions of dollars in fresh capital for its financial markets. Bloomberg's Vietnam Bureau Chief Francesca Stevens joins us from Hanoi. Francesca, this was a long time coming. Market reaction seems a bit muted, but it's still good news. It is still a game changer.
That's right, Haslinda. It has been quite the wait for Vietnam to get here after first being added to the watch list for potential reclassification all the way back in September 2018. But since then, big steps have been taken to bring the market into line with global standards. And that's included things like removing the requirement for overseas investors to fully pre-fund equity trades and establishing a formal process for handling failed trades. Another reform is aimed to eliminate the ability of public companies to impose foreign ownership limits that are lower than those permitted by law. And the launch of the long-awaited KRX trading system back in May was also seen as another crucial step to strengthening transparency and also market infrastructure. And as you said, optimism around the upgrade has helped lift the benchmark VN index to fresh highs. It's climbed more than 30% this year. Stocks jumped around 3% in pre-market trading on the news, but they've gained slightly, with many analysts seeing this upgrade pretty much already priced in.
So how much more upside for Vietnamese stocks? What are we hearing on what this means for Vietnamese stocks?
Yeah, well, the FTSE predicted an upgrade could add up to $6 billion in redirected foreign inflows. HSBC sees it more around $3.4 billion of inflows, but with potential for higher. There are obviously longer-term benefits to being labelled as an emerging market. It opens Vietnam to a broader pool of investors with wider mandates, and opening it to more foreign investors' participation will only deepen the country's liquidity. But it's also seen as a stepping stone to an even bigger prize. The government has its sights set on reaching emerging market status by MSCI by 2030. And that's widely seen as a more significant milestone, potentially unlocking even greater foreign inflows. Now, analysts that my colleague Zhang has been speaking to this morning say that what's most critical now for Vietnam is to continue its path of development. And the authorities need to keep pushing through reforms to improve market accessibility for foreign investors. They also caution that with valuations already stretched after this year's stellar rally, a cooling phase during a typical sell the news cycle may be the next test for Vietnam's market momentum. So lots to keep an eye on here in Hanoi.
That's right. And what is a stellar rally out there in Vietnam? Our Vietnam Bureau Chief, Francesca Stevens in Hanoi. Thank you so much for that. For more on Vietnam's emerging market upgrade, let's bring in VinaCapital Asset Management Chairman and Managing Director Nguyen joining us from Ho Chi Minh City. VinaCapital is one of the largest investment management firms in Vietnam with about $3.7 billion in assets. Too good to have you with us. Talk to us. I mean, will this fundamentally reshape investor confidence in Vietnam?
Certainly. This is a historic moment in Vietnam. When the long 7 years wait has finally, the day has arrived for Vietnam to be reclassified as an emerging market, but with an effective date of September 2026. Clearly, it underlies the effort of the government, the regulator in particular, in achieving all the conditions set out by FTSE and even working on some criteria that are being set out by MSCI. I think the market's reclassification for Vietnam will help bring in inflows, restore investor confidence, and further build upon investor confidence in Vietnam after a long stretch of foreign outflows amounting to billions of dollars. I think this is a moment when we can expect foreign inflows to return to Vietnam.
Well, the thing is, the Vietnamese markets have done pretty well. Equities up 30% year to date, but pretty much driven by retail investors. The question really is whether or not foreign investors will come back.
Yes, it's a big question for sure, given that valuation is now at the level that's higher than at the beginning of the year. However, if we look at a longer term valuation, it's still very much in line, or rather it's on the median or the average valuation for the last 10 years, while the macro fundamentals have changed for the better, significant change for the better. And earnings growth for Vietnam is still the best in the region. We are forecasting earnings growth for listed companies in Vietnam to be between 15 to 16%, both 25 and 26.
A couple of factors when it comes to foreign investors. They've been net sellers because they're concerned about FX volatility, the volatility in the currency, as well as the credit boom in the country. Is there reason to continue to be concerned about these factors?
In terms of the currency, clearly, I think Vietnam's currency has weakened against many other currencies, but it's given the objective of the government is to maintain the stability versus the US dollars, we still see the currency performance to be in line with expectation. In terms of the foreign investors' concern about further weakening, we would say that I think for this year, the depreciation against the US dollars will probably be capped at 5% because the government will do whatever it takes to keep it, not to go above 5%. In terms of, other concerns by foreign investors, including transparency, I think the government is already addressing a lot of those concerns by upgrading disclosure requirements for listed companies.
We had FTSE Russell saying that the upgrade will mean an addition of perhaps $6 billion in inflows, but HSBC's projection was pretty muted at half of that, about $3.5 billion. So your own projection is somewhere in between, or how optimistic are you about inflows?
We actually believe that the passive inflow is fairly easy to predict, and it's around $1 billion, but the active flows would be a lot harder to predict. And in this case, it really depends on the view of the fund managers, the global fund managers on Vietnam's longer term outlook. On this front, I would like to highlight the efforts by the government in terms of economic reform. I think the pace of reform is unprecedented in Vietnam, which will be a good foundation for longer term GDP growth in the range of 7 to 8% in the upcoming years. And that in the global context of slowing down growth everywhere else, I think would make Vietnam stand out as a good investment destination.
It is a long time coming, and the upgrade is great for Vietnam. The question is whether Vietnam is able to play with the big boys now in the emerging market space, competing with the likes of India, China. Can it compete effectively?
If we're talking about the weight of Vietnam within the EM index for FTSE,
basket, yes, correct.
Yes, it's estimated at only 30 to 50 basis points. So yes, it's relatively small. But I think for active managers, the reclassification means more than that, because active managers can overweight Vietnam, which is what I believe they will do because of the very positive outlook for Vietnam's long-term growth.
Thuy, you know this market really well, a market of 100 million people. How best to get exposure to Vietnam?
We believe that getting exposure to the market via some, well-managed open-ended funds is the good way, because it provides liquidity and exposure to the best companies that capture the best growth opportunities within Vietnam, with a governance-minded, with a governance and risk control mindset. Because for us, when we observe some of the ETFs that are purely based on size in Vietnam in the past decade, the performance over the long term has not been the best. So we would advise investors to have an active exposure to Vietnam. If people cannot pick stocks, I think going through some of the best managed funds in Vietnam is a good way.
And in terms of sectors, would consumption be one? We also know that this is a pretty young population. I think an average age of, median age of about 32.
Yes, that's correct. I think the long-term prospect is that Vietnam is still enjoying this golden demographic structure for around the next 15 years. And therefore, the extended theme of consumption, including the urbanization trend, is also a very good way to expose to Vietnam. And there are a couple of funds that focus on this theme. And I think that in Vietnam, because of the low urbanization rate currently, real estate is, I think, in the long term also a good sector, although at the moment the valuation is very stretched. Banking is also a fantastic way to get exposure to Vietnam, because it's the backbone of every sector, the backbone of the structural growth in Vietnam. And it's benefiting from this transformation of the Vietnamese economy. The government has a target to bring Vietnam to a high income threshold in the next 5 years, in the next 20 years, and the upper end of middle income in the next 5 years. So very ambitious target by the government. And with the drastic reforms that have been happening, we are confident that these goals will be achieved.
Right. And we've seen a wave of IPOs in the country as well. Is that sustainable? And is that a good way to gain exposure as well?
Yes, I was going to say that I think the FTSE upgrade is not the end goal. And in fact, the government is already working on better access for foreign investors and widening and deepening the market by encouraging and facilitating a wave of IPOs. I think in this case, we are seeing an influx of IPOs this year, in fact, after a very muted period since 2019. And therefore, I think, again, this is also one of the very positive catalysts for foreign investors to come back to the market. Whether or not it's sustainable, I think it's dependent on a couple of things. First of all, the economic trend. Secondly, the market valuation. I think, obviously, companies' owners would like to IPO at a relatively reasonable valuation and not too cheap. And I think in this case, Vietnam's current valuation of 13 times forward PE actually facilitates that. Hopefully, with the market upgrade, Vietnam's PE will be even further re-rated, and thereby encouraging more companies to come to the list.
You got to wonder if Vietnam can achieve the target it's set for itself in terms of growth, which is 8.3%. Given the challenging environment globally, what are your thoughts on where it will be in terms of GDP growth for the year?
Right, for this year, our economist forecast is 7.5%, so slightly under the government's target. But next year, our target is for about 8%. So the reason for the positive targets is because we're seeing very good signs in exports. So despite all the noise about tariff, our export performance for the first 3 quarters have been very positive. And we believe that I think all the tariff dust will settle, and in which case Vietnam will come out again as a winner, because relatively speaking, our tariff rate currently is on par with other peer countries, but we have much more competitive workforce and low labor cost, and I think cheaper cost of doing business within Vietnam, much compared to other countries. So continued strong performance in exports, plus the reforms are bringing back the real estate to life, and therefore creating other growth catalysts for the country in the next 2 years.
Two great perspectives. Thank you so much for your time today. VinaCapital Asset Management Chairman and Managing Director Nguyen. Up next on Insight, we'll dig into more of the key investment themes driving markets with St. James Place Asia and Middle East CIO Angelina Lai. Keep it here with us. This is Bloomberg.
Gold is a very excellent diversifier of the portfolio. So if you were to look at, just from the strategic asset allocation mix perspective, you would probably have something like, as the optimal mix, something like 15% of your portfolio in gold, because of the fact that if you didn't even have a tactical, because it is the one asset that does very well when the typical parts of your portfolio go down.
And that was Bridgewater associate Ray Dalio speaking about gold and its safe haven status. Well, spot gold prices have climbed above $4,000 an ounce for the first time. That's as concerns over the U.S. economy add fresh momentum to a scorching rally. Bullion has now jumped more than 50% this year in the face of rising trade and geopolitical uncertainties. Let's get more with St. James Place Asia and Middle East CIO Angelina Lai. Angelina, we heard from Ray Dalio. He says it's a great diversifier. It is a better haven play than USD. And you agree?
I'm not sure that we do, actually. So he's absolutely right. Gold has done extremely well, particularly when market goes down. It has also been a very interesting inflation hedge. We've done a lot of tail analysis, i.e. when market go down, how do gold sort of fare in comparison, particularly also with equity market. And what we actually have found is probably around 70 to 80% of the time it does do okay or do quite well, but it doesn't always give that diversification. And actually correlation between gold and equity market tend to be around 50 to 60% positive. So it's not the greatest diversifier that people tend to think that it is. Coming back to the precious metals, actually quite interestingly, so this year, and actually probably for the last few years, gold has been sort of the golden child, if you will, with year-to-date returns around 52% so far. But did you know that silver is actually up 65% and platinum 85%? So really what we are really seeing is a flight to safety. We tend to talk about gold as a forward indicator for the fear and greed index, actually, because there is no cash flow attached to gold. And for a organization such as us that believes in valuation and fundamentals as the basis, it's extremely difficult to value something like a gold which does not have cash flows attached to it. So fundamentally what you're really looking for is what is the next investor, when you're ready to part with your gold, willing to pay for that gold. And therefore, it is an interesting diversifier as potentially a small percentage of your portfolio. But what we're really looking at is, in general, within the market space, with all of the assets, what is actually the best opportunity at the moment.
Where to for gold? Because when you take a look at key indicators, they suggest there is a lot more momentum. What assumptions are you making about gold prices, and how much gold should you have in your portfolio? Some say a maximum of 10%.
Well, so that's an interesting interesting one because Ray Dalio's one, Bridgewater, actually, he had written some thesis paper actually based in sort of 1970s and 1980s. And when he looked at how sort of gold fared with the market, we've since had significantly more market data. And to some of the analysis that we have done, we do tend to find that a small percentage could be interesting during tail risks. But actually, what we're really seeing at the moment is that, certainly from a valuation perspective, which I did explain is our process, it doesn't really add that much opportunity. So rather, from a mathematical perspective, because gold value is so high at the moment, we actually see the future potential of gold rising at the level that it has done much, much less likely.
We're seeing some kind of correction in the broader market. How are you assessing that? Is this a consolidation period? Are we seeing further correction? Or is it a case of investors being on edge and wanting to be a bit more cautious?
We certainly are finding investors we're certainly hearing our clients feeling on edge. We are hearing our clients saying, should I be putting my money into cash? Should I be putting my money into gold? Should I put it into Bitcoin, digital assets? Should I be putting into what actually the traditional safe assets tend to be the US dollar and the Japanese yen, both of which have actually been weakening significantly this year. So really there is a question mark as to where do we go. But actually, what's quite interesting is that if you look at the market itself, it has been rallying quite a lot. The economies, despite some of the geopolitical headwinds that we're seeing across the world, particularly in the US, we're actually seeing that the market kind of just shrugging that off and sort of focused on actually economic conditions are solid and businesses are finding opportunities. There is, for example, a lot of AI-fueled investment and a lot of excitement and conversations within that space, and therefore, in general, businesses are actually really able to turn on really quite good earnings.
And investors are looking for reasons for justification for their investments in things like AI. Mm-hmm. So this reporting season becomes even more important. Expectations are very, very high, and these companies will have to outdo themselves in a huge way.
Yes, that's a really interesting discussion, right? We've probably come to this year where really the CEOs and the CFOs of any businesses really sort of they mention AI, investment into AI in any of their analyst meetings, and almost their stocks could be jumping. And we still seem to be continuing to see that. I mean, last week we had quite a few investors sort of concerned about the US shutdown, but actually instead we had a huge market rally. It actually seemed to be fueled by a lot of the AI investment stories with OpenAI and so on. So it's to a point where actually people are almost saying, are we really sort of looking close to a dot-com bubble type of event?
Are we?
Well, this is the interesting thing, right? So if you look at the data, the S&P 500 now, the top 10 stocks are concentrated, they contribute for more than 40% of the S&P 500. This is unprecedented levels. The last time that the top 10 stocks was as close to this level of concentration was only at 30%. And that was in the year 2000 in dot-com bubbles. And really, again, when we look back to the valuations, when we are looking at US versus non-US and so on, really what we're seeing is the opportunities are more into the non-US stocks,
right.
As well as into, for example, small cap versus large cap.
Angelina, we have to leave it there. Thank you for coming in.
Thank you.
Angelina Lai, Asia and Middle East CIO at St. James Place. Coming up, we're live at the Global FinTech Fest in Mumbai, asking the governor of Denmark's central bank how they're preparing for so-called hybrid attacks on the financial system. Join us for that exclusive. This is Bloomberg. Welcome back. You're watching Insight. New Zealand Central Bank has cut rates by a larger than expected 50 basis points. Monetary officials say they're also open to further reductions to stimulate demand as the economy struggles to grow. The economy shrank more than expected in the second quarter. Growth has also been tepid since a deep recession in 2024, despite the RBNZ's aggressive easing cycle. Do today's global risks warrant central banks adopting even easier policy stances or ignoring Nødgaard, one of the three governors at Denmark's National Bank, joins us now with his view. Governor, thank you so much for joining us. What's your take, given the macro environment, the uncertainties to do with tariff, to do with growth, to do with trade? Is there a need to ease further?
Yeah, so the setup we have in Denmark is a little bit special because we are pegged to the euro. And so we follow very closely the interest rate decisions of the ECB, and that's really where our main focus is. And I think what we see and what markets expect right now is that the interest rates in the Eurozone more or less are where they will be for the foreseeable future, and that also applies to Denmark, of course. If we look at the macro environment from a Danish perspective, we just came out recently with a downward adjustments of the growth prospects for Denmark. And part of that is, of course, related to the tariffs. Denmark has some exports to the US. Indeed, it's our largest export market. But it's also only a fifth of that export that will be subject to tariff because we do export a lot of services. And some of the exports we do to the US is produced within the US. And so we don't get tariffs on that part. So that's maybe one key to understanding why it doesn't have a larger impact on the Danish economy, these tariffs.
So fair to say that you are quite comfortable where you are, no easing expected for the rest of the year at least. We have a lot of central banks buying gold, snapping up a lot of gold as a safe haven play. I'm just wondering what your thoughts are on accumulating gold.
Well, we have a fixed stock of gold. We've been having that for years. We don't sort of do any active management of that. It sits there, and of course it has risen in value recently, but it's not something we manage from day to day or do tactical investments or positioning of that.
So what's the outlook for the economy then, Governor? We know that this is an economy that's very tied to the pharmaceutical sector, and one major player, Novo, has been struggling. The fact that Novo is struggling, are you concerned that it may impact the economy and your growth projection for the year?
Yeah, so clearly pharmaceuticals is important for the Danish economy, but one should not overestimate the importance. So we recently came out with a downward adjustment in the growth outlook for Denmark. So now it's 2%, more or less, for this year, which is, if you compare to the Eurozone and so on, it's pretty okay, but it is a downward adjustment. And part of that was related to the fact that the growth prospects of Danish pharmaceutical companies have been reduced, but we still expect growth in the pharmaceutical sector. We still expect sales and earnings in that sector to grow. But I think it's fair to say that the growth rate going forward will be slower, and we have taken that into the forecast for the Danish economy. And when we add the tariffs, when we add the lower growth in pharmaceuticals, we end up with a growth rate of the Danish economy around 2%, which I think is okay.
There's a lot of optimism in what you're saying, Governor. What if it doesn't turn out the way that you described? What if Novo does not overcome its struggles? There are concerns perhaps it could be a Nokia scenario that we're looking at. Is that something you might be concerned about?
Well, you're not the first to ask that question. Of course, we have looked into this. As I said, we think Danish economy can do fine, even with a Novo that's growing at a slower pace than it used to. It's still the pharmaceutical sector in Denmark is still very profitable, and that is expected to increase. Just to give you one number, I think the total employment of Novo in the Danish economy is something like 1% of total employment. And of course, a lot of the staff there are very well-educated, smart people and so on, so that will be able to find jobs if anything should happen. But that is really not what is in the cards right now. When we do the prospect for pharmaceutical industry, and now we still expect growth in the coming years, also for Novo.
You talk about the labor market. Are you confident the labor market will remain intact? From what I understand, it's not just Novo that's going through one of the biggest rounds of job cuts right now. Also in the midst is Ørsted. Given the job layoffs we are expecting, might there be ripple effects on the economy?
Yeah, so overall we actually expect employment to grow over the next couple of years in Denmark. Because, as I said, the economy is expected to grow around 2%, and this is sort of fairly broad-based. We have a consumption rising, we still have export growth and so on. And of course, with a growth rate of around 2%, employment will go up as well. What we've seen over the last couple of years is we've been able to expand employment even with a low employment rate, and that's due to the fact that more people have come into the labor market, and they come from two sources. We see that the elderly on the labor market are continuing to work more than they used to, so the retirement age de facto is sort of increasing, you could say. And the second part is that the number of people coming from abroad, foreigners working in Danish economy, has really gone up significantly over the last years. And that has made it possible to grow employment on the one hand, but at the same time we see a lowering of sort of labor demand shortages. So we think we're on a balanced path so far, even taking into account tariffs and a lower growth in pharmaceuticals. That's how we see the Danish economy going from here.
Gotta love the confidence, Governor. Are there risks in the economy? Some might suggest the property sector, housing prices at record levels.
Yeah, that's a relevant point for sure, and it's something we are in our sort of financial stability role looking into. When we look at the overall economy, I think the development in housing prices is more or less in line with the developments in interest rates and income of households. So there we don't see any sort of alarms. Where our focus is really on the housing market around Copenhagen, our capital, where over the last year property prices on apartments have risen by 17%, which of course is not a long-term sustainable growth rate. And so we have a close focus on that. And what we do see, however, is also some things that give us a little bit of comfort. Is the sense that we do see some kind of selection bias where the people who actually buy these apartments actually have higher incomes than sort of average. So in that sense, they can afford it. We have also seen the short-term interest rates coming down, which also explains why it's possible for these prices to rise so significantly. But it is an area of focus. It is an area that we really zoom in on because we want to avoid having a sort of this going into some kind of self-fulfilling developments where people think they need to get into this market just driven by the fear of missing out, you could say. So it is clearly one of the, when you talk about risk, this is one area of focus for us.
And Governor, we know that Denmark has seen a series of hybrid threats. How prepared is the financial system to face these threats?
It's true with these times, geopolitical tensions, and as I would say, maybe especially also in the Nordic-Baltic region where Denmark is, it is a central area of focus for our work to look at how can we make for instance, the payment infrastructure in Denmark resilient vis-a-vis hybrid attacks and cyber attacks and so on. And one of the things we're working on, and which I'm going to talk a little bit about here in Mumbai, is trying to come up with a structure that will work even if the whole payment system is offline, if there's no connectivity, for instance. Because in Denmark, payments are digital, they're 90% card-based, so we need to have a structure that can accommodate that. And right now we have started that for the very large grocery chains in Denmark, the nationwide grocery chains. They are starting to adopt this scheme, where essentially, even if there's no connectivity, you can do offline card payments for up to 7 days. We think a lot of other businesses should look in this direction. We're certainly hoping that. We just came out with a recommendation about that 2 days ago. That will certainly increase the resilience. The other thing we are looking into is really about what is called account-to-account payments. Can that have a bigger role in the physical stores? We have the technology, it's available, but we need to make sure that will also be part of the payment options, because then we would have two systems. We would have the card-based systems on the one hand, and we would have an account-to-account-based system, and that will give greater resilience.
Governors, we talk about resilience and payments. I'm just wondering what your thoughts are on cryptocurrencies as the adoption is gaining momentum, and we're seeing, Bitcoin surging to record highs.
Yeah, so in the Danish context, crypto as such is not a huge thing. I mean, when we look at the numbers, it's something like 4 or 5% of Danes that have some exposure to this. The financial sector in Denmark is not really involved in this currently. So in terms of sort of the risk picture, we don't see this as a major thing. Certainly one of the things we're looking into right now is, of course, also development in the stablecoin market. Could that be a thing? I think our judgment is for Danish retail payments, there's not a strong use case there. But certainly for cross-border payments, remittances, and so on, there is a potential use case internationally for this, and we'll follow it closely. As you may know, in Europe, there is already a regulation of stablecoins, providing sort of requirements on AML and liquidity management and these kinds of things. So I think that's positive. But it remains to be seen whether or not there is a use case. As I said, I think it's specifically within Denmark, it's probably not that clear. But there could be a use case for transferring money across currencies and so on, and cross borders in particular.
Governor, thank you so much for joining us on Insight. Ulrik, Governor at Denmark National Bank. Coming up, the CEO of India's largest agricultural commodity exchange will be joining us to talk expansion plans and market strategy. Keep it here with us. This is Bloomberg. Indian markets have just kicked off the trading day. Let's do a check on how the initial numbers are right now. Taking a bit of a breather right here, the Sensex flat. As we speak, the Nifty Bank Index is down about 0.1%. No change for the Indian rupee, trading at 88.77 as we speak right now. Now, what's in focus is gold. It may be grabbing the spotlight in commodity markets, but after a period of unprecedented volatility and soaring prices, global markets for cocoa, coffee, and sugar are cooling off. Earlier this year, all three hit record highs, but prices are now easing, driven by better supply prospects in key producing regions and a slowdown in global demand. Joining us now, Arun, the CEO of NCDEX, India's largest agricultural commodity exchange. Good to have you with us. We know that your exchange does not really do gold. It is traded on the MCX. I'm just wondering, given where gold is trading right now and expectations it could go higher, should the NCDEX be doing more gold?
Oh yes, why not? That's an opportunity for us. And if the prices keep going up, I might launch a mini gold contract in future.
So when might you do that? How might you do that? How are you looking at it? What's the plan?
Well, there are 2 or 3 things we are looking at. We are known as Agri Commodities Derivatives Exchange. So definitely Agri is our staple. And there we are increasing our footprint. Not necessarily commodities in the commodity sense, but we are looking at some of the products which are not launched internationally anywhere, except US, like the weather futures. We are looking at a rainfall future, and we intend to launch it by June next year when the monsoon rains come to India. We have tied up with the Indian Meteorological Department, and the Indian Institute of Technology, which is the premier scientific organization in India, to launch this particular product. So that should be ready by March. And that's an indirect agri-commodity, but it is not commodity in the sense of commodity, but it will help the whole farming community. That's one. And second, we are looking at is carbon. Carbon credits will be a major thing, because from the same 1 hectare of land, the farmer will be in a position to get more money, more income out of it, because if he is in a position to sell carbon credits, he should derive more benefits from his own farm. So these two products are indirect. Definitely we will look at commodities like gold and silver, or crude for that matter, going forward.
And Arun, when you take a look at commodity prices, they have been surging. Case in point, we have coffee. Arabica beans, up 70% year to date. What do you think is driving all of that? There's a sense that perhaps global speculation may be behind it.
Well, speculation could be one thing, but there is a tendency, or there is a myth blaming derivatives for any prices which is going up. Actually, derivatives are messengers. Derivatives tell you 3 or 4 months down the line what could be the prices of a commodity, because what happens today is not something which derivatives drive. It could be because of the shortage. It could be because of low stock. It could be because of concentration in particular geographies. It could be logistics issues because of the wars like Ukraine. Say, if a couple of years ago, the edible oils industry was equally affected because of the Ukraine war. The soybean oil, it went up. Sunflower oil, it went up. So there could be various other reasons. But to claim that derivatives are driving prices up is a little bit of myth. Second, if you're looking at speculation, yes, there is speculation, but the speculation is not sustaining. And the prices, as you mentioned yourself, they have started cooling down. So at the end of the day, actual markets, they find their price. The price discovery takes place. And it happens in all commodities.
Right. Is it somehow shaping farmers' role in price discovery?
See, this is one of the good things that happens to farmers, especially in our part of the world, because if you are looking at South Asia, most of the farmers are either semi-literate or literate. Now, when farmers aggregate in the form of a company or cooperatives, they are in a position to take positions in the markets, because that particular aggregated form, it could be a company, and there could be a professional who could be driving that company. He or she understands this business, and if that person is in a position to take positions, looking at the future markets, the sowing decision of the farmer itself could be beneficial to the farmer. If the farmer knows in the month of, say, June or July, that groundnut or soybean in October will fetch him better returns than probably paddy or rice, he would definitely go and sow soybean or groundnut. And those kind of decisions help farmers take better decisions and realize better value out of his own farm. Second, price. Normally, the farmers are price takers. They never set prices. But if the farmers' collective comes in, if they utilize this market productively, definitely they will become price setters, and that will be a big thing to farmers, and especially the poor and small farmers.
Arun, earlier you talked about weather derivatives. We know that popularity has swayed, it's in, it's out, and now we have SEBI pretty much, giving the go-ahead. Why is this the right time to have these weather derivatives? How much of it has to do with the unpredictability and the crazy weathers that we've had so far?
See, there are 2 or 3 different aspects. One is definitely the global warming. Because of that, either you have periods when the heat wave goes up, or sometimes there is a dispersal of rains are not on a predictable lines. And when these kind of things happen, there are a lot of risk to the farmers or the farm produce. Now, somebody has to take care of the risk mitigation mechanism, and obviously there could be something like agriculture insurance, but that is post facto. It's like somebody has died and you do post-mortem. But what you do in with the derivatives is you are forecasting, and you are ensuring that your risk is hedged. The second thing which happens, especially you're talking about climate resistance technologies in terms of seeds. Now, weather derivatives along with the climate resistant technologies will mitigate all the production losses, and it will also help all the stakeholders to ensure that their risks are hedged. Their stocks are taken into consideration, their land records are taken into consideration, the natural probably disasters or good years, they are also taken into consideration when you are pricing any particular product. And therefore, things like weather derivatives are absolute necessary for the farming community. The second part of it, this is the industries which are dependent on farms. It could be machinery manufacturing, it could be seed, it could be inputs, it could be fertilizers, it could be pesticide. All of them are dependent on farm industry. If the farming is not going okay, all these industries also get impacted.
Is there a sense that India could be a global model for tackling climate risks?
That is our ambition, because what we can do today in a country of 1.4 billion people, definitely it will be followed first in South Asia, then in Africa, then in Latin America, and then throughout the world. That is our model that we are looking at. One very scientific and rigorous set of rules, standards, and once we have this particular contract in place, and maybe a couple of years down the line, people will start following it. Definitely, that is ambition.
And when it comes to equity derivatives, I mean, what's behind the launch of this platform?
Well, we have not launched yet. We are just preparing for launch. We just got approvals from our regulator to launch equities. Now, if you look at the numbers, in just last 1 year, about 23 million new investors have come into the equities fold. Obviously, this is a growing market. And if you compare India with, say, China or US, we have only about 20-odd% people who are invested into equities. And when I'm saying equities, it is not derivatives, it is equities, it is mutual funds, all of it put together. But if you look at a country, any of the developed countries, almost 50% of the population is invested into equities or equities derivatives market. So there is a huge scope for a country of 1.4 billion people. There are two requirements. One more exchange, which could be operating as efficiently as the existing two big exchanges. And second, differentiated products and differentiated markets. Now, since we have been involved in agri and agri-commodities, we have a very huge connect with the rural population. And so far, for the rural population, the only investment which they do is either things like gold or they buy land. They have never invested in equities. And with our connect, we would be in a position to bring them into equities fold. What would it happen? What would it help is, we will create more capital within the country. It will help the industrial sector also. We will not have to depend on FPI or FIIs for, bringing in capital. Our domestic capital should be in a position to take care of the domestic industries. Right. Obviously, the growth of the capital will increase the output, and it will also benefit the people who are investing in rural areas. So that is the thought process of getting into equities.
Arun, thank you so much for your time today. Arun Raste, MD and CEO at National Commodity and Derivatives Exchange. And that is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.